Oh boy, oh boy, oh boy, and good morning. It is Tuesday, January 11th, 2022. And yesterday, when I was broadcasting from my office, there was a big storm outside, if you remember. It rained all night, thunder and lightning. And I suggested that maybe it was going to be a tumultuous, stormy day yesterday. And what did we have? We had a stormy day starting right early in the morning, even before the markets opened. After that, Goldman Sachs article came out about 4 rate hikes that we can expect in 2022 and a faster tapering and a faster balance sheet reduction, creating all kinds of turmoil. But let's talk about that and let's see what's new today on January 11th, 2021. Now you can see I'm here at the beach today. The sun's just coming up. There's still a bunch of clouds behind me. They're kind of dark, but it's not raining. So I'm not sure it's going to be as stormy as it was yesterday. But let's be clear. It is all very orchestrated. It's all very orchestrated. Stocks plunged and then it attempted to rebound on a buy the dip play after they trekked out Jamie Dimon to counter the Goldman narrative. 10-year yield surged up and through 1.8%. Year-end targets now have a 3 handle on them. Cryptos continue to be under pressure. Bitcoin about to experience a death cross, and that suggests further weakness ahead. And Powell's on Capitol Hill, his renomination almost assured. Clarity reveals that more insider trading is causing him to bow out this Friday. And what are we having for dinner? We're going to try the breaded pork cutlets bathed in a white wine, but we'll get to that in a moment. So it was a Goldman Sachs JP Morgan drama playing out across the big screen yesterday. And yesterday's action was all about future Fed policy. Not so much who delivered it, but the fact that it was delivered, right? There was nothing else going on except the talk around Fed policy. It was a crazy day. Futures, which were flat in the early morning, then turned decidedly negative going into the opening bell when the Goldman Sachs call hit the newswire, right? And so you ask, what was the call? Or better yet, you should ask, what is the call, right? So what we found out yesterday was that the call heard around the world is for the, Goldman says that the Fed is going to raise rates 4 times in 2022, March, July, September, and then December, in conjunction with that swifter tapering schedule and the balance sheet reduction that will no longer wait until 2023. It was a bold call. Not necessarily a new one, but it was a bold one that was fully and completely orchestrated. At some point, someone had to say it for what it is and stop this dance. The Fed is way behind the 8 ball. Their months of saying that they had it under control has, in fact, caused them to lose control. So they needed to get one of the big investment banks out there to float that idea, to put it out into the global public marketplace, to allow the conversation to happen, to see how investors and the markets would react. And how did they react? Well, it wasn't pretty at the beginning for sure. You see, you got to ask yourself a question. Why did Goldman make this call yesterday? Where were they last week? Where were they last month? When there was plenty of data points that have been pointing to the need for the Fed to move. But alas, they were told to keep quiet. Shh, don't say anything until the new year. The Fed didn't want to upset the apple cart in late 2021. So they didn't. They kept it quiet, right? But they couldn't keep the reality of it down. They needed a partner to help carry out this mission. So come on, you just don't become that aggressive in the last 7 days. Did they not think that 4 rate hikes were a reality last month? Or were they just giving their best clients a heads up prior to notifying the rest of us? The story's been simmering on the back burner for months. Come on, we know it has. And now you're telling me that the brain trust at Goldman suddenly woke up yesterday or Sunday after a Sunday or over the weekend? They suddenly saw what Joe Q Public has been saying all along? The funny thing about this is that the Fed had the Fed moved in the fall when there was a chorus of analysts and strategists calling for something, for a move. We wouldn't be in this position today. Inflation would not be spinning out of control the way it is, and they would have had a better shot of controlling the narrative. Now, my fear is that they've lost control of the narrative, so now they gotta enlist the big investment banks to kind of help them out. Now, I've been saying it for months now that the Fed was going to get much more aggressive in the new year because they didn't want to cause a year-end meltdown, right? They had to get more aggressive. I mean, think about it. The data was very real. I was fearful that they were falling behind. I kept saying that they're behind the 8 balls. The stories you heard every day from everyday Americans were the canary in the coal mine. Yet no one wanted to hear the voices sing, which is a clear reference to Les Miserables. You should watch it if you haven't seen it. Do you hear the voices sing? Now look, Goldman called for 4 25 basis point moves, while I suspected that we could have 3 moves of some combination of 25 to 50 basis points. You see where I'm going with this? Right? We're going to get to the same place. It just depends on how fast you want to get there, and that is what's going to determine how much volatility is ahead. A 50 basis point move in one move would shock investors and the markets. But maybe that's just what must have to happen to stop this excess, to stop the hand-holding that has gone on for way too long. What we need now is bold action to stop the bleed and to shake the branches a little bit. I've been saying that I thought that it was going to be after Jay's renomination vote, which, by the way, guess what? Happens today. Once he was secured, locked and loaded, then it would be time to let it rip. Oh, and rip it did. Stocks ripped lower, and by 10:40, the Nasdaq had lost over 400 points, or 2.75%, sliding right through its long-term support line at 14,690. Bringing its 6-day performance to negative 8.25% before the dippers began sniffing around. And then they brought out JP Morgan's Jamie Dimon to tell everyone to calm down. And yes, while the road ahead may be rocky, as we navigate this move, and it might even be more than 4 moves, the U.S. economy is strong and resilient, and that 2022 was going to be a great year, so nobody needs to get nervous. And that brought calm to the market, and in a tremendous turnaround, the Nasdaq rallied back, fueled by the algos as they redirected the focus from the negative to the positive, ending the day up 7 points at 14,942. That's right, they took back the 400-point loss and ended the day higher. By the time the 4 p.m. bell rang, the other indexes were also off their lows, right? The Dow lost just 162 points, 0.5%. The S&P ended down 7 points, or down 0.1% after being down 100. The Russell gave back 9 points, and the transports lost 250 points, or 1.5%. Ugly, yes, but is anyone really surprised? I don't think the volatility is over yet. This action yesterday didn't wash it all out. Not so quick. You could argue, actually, that the path ahead is now even more cloudy. The 10-year Treasury yield shot as high as 1.81%, helping to fuel that early sell-off, but then it backed off a bit before settling down at 1.76, which helped stocks regain some of the lost ground. But remember, calls are now for 3% plus yields by year-end, and that's also now out in the public square. And so investors are going to have to price that in as well. And if inflation fails to respond to the Fed moves, then we could see a whole new conversation taking place. Oil. Okay, what did oil do? It also had a wild day, going from a high of 79.42 to a low of 77.90 before closing at 78.43, down about 50 cents on the day. This morning, oil is up $1 or 1.5% at 79.31. Once again, about to kiss the $80 barrel as demand for energy remains strong. Don't let anybody kid you. Demand for energy is strong. Cryptos continue to get hammered as investors and traders contemplate what a more aggressive Fed is going to do to this asset class. Bitcoin fell to as low as 39,670, a stunning 43% loss from the November highs of almost 70,000 before it ended the day at 41,700. This morning, Bitcoin's trading at 42,000, just as the 50-day moving average is about to slice right through the 200-day, suggesting a death cross, which would suggest further weakness ahead. Just saying. Ethereum traded down at 29.30 before finding buyers that took it back to 3,100. Ethereum has also lost about 38% from its November high as investors reallocate those monies once again. This morning, Ethereum is trading at 3,100. I suspect that these assets are also going to continue to come under pressure until we get more clarity on the next move. Look, the sun is coming up. How beautiful is this day? I mean, and the air is just perfect. Gold ended the day at 1,800, hugging all 3 of the trend lines that are converging together right there around 1,800. A push up and through could see us test the November highs at 1,870 if the inflation story continues to heat up, while a failure to hold could see it plummet to 1,750 before it found any significant support. My guess is that it's probably, the next move is up and not down. The dollar index has been stuck in this sideways trading pattern, helping commodities surge higher. Gold, oil, lumber, soybeans, coffee, steel, etc., all higher. This This, as this morning, the dollar index is sitting right on its 50-day moving average trend line. A failure to hold here is going to see it back off a bit, and that's going to give commodity complex room to run. If the dollar holds and trends higher, then that's going to offer some relief to commodity prices, as commodities are priced in dollars. As the dollar strengthens, commodities tend to back off, and vice versa, right? As the dollar weakens, commodities tend to move higher. There is absolutely zero economic data today, but remember, it's all about what happens tomorrow and Thursday, the CPI and the PPI. We discussed it yesterday. Go back and look at my notes, so get ready to rumble, because those numbers are going to be very significant in the days ahead. Friday also brings us the start of the earnings season. We know that all the big banks, JP Morgan, Citibank, Wells Fargo, BlackRock, all kicking it off. No need to go over that. I discussed that also in yesterday's note. This morning, U.S. futures are up. Dow futures up 135, S&P's up 22, Nasdaq's up 140, the Russell's up 9 points. Should be no surprise after kind of the drubbing that the market has taken over the last 6 or 7 days. Jay Powell is on his way to Capitol Hill for his Senate vote on his renomination, and Lael Brainard's turn is on Thursday. We know that for her nomination as vice chair, right? Both expected to be approved, right? On a side note, though, Vice Chair Ricky Clarita has decided to leave his post this Friday ahead of schedule and ahead of another bombshell announcement of his personal trading account. Yet nothing happens, right? Curious, isn't it? Rules for thee, but not for me. Whatever. Omicron, just on a side note, which has nothing to do with the trading yesterday, is set to peak in the next 2 weeks, all while the big drug companies are telling us that we have to get ready for a fourth and maybe even a fifth shot as new variants are born. We already have 2 more that may be coming, one from France, the IHU variant, and now one found in Cyprus called Deltacron. Oh boy, can you just see where this is going? European stocks are also up this morning as investors there await the latest U.S. inflation data and any hints of clarity surrounding the drama that was created yesterday. Talk of what the Bank of England and the European Central Bank are going to do is starting to boil on the back burner, as inflation across the Eurozone is now at record highs. At 5:30 this morning, European markets were all up about 1%, maybe even a little bit better than 1%. But again, considering where they've been over the first 5 or 6 days of the year, that does make some sense. The S&P closed at 4670 after testing as low as 4582. A nearly 100-point loss. And if we get some relief today and we follow in Europe's footsteps, an easy 1% plus move up today would not be a surprise at all, considering what's happened over the past week, right? Where the markets are, the indexes are. Watch what the CPI and PPI say about inflationary pressures tomorrow, and pay attention to what the different Fed heads start to say, because then you're going to understand even more what's next. But understand it's going to be more unclear now that Goldman's thrown that in. The Fed's now going to have to address four rate hikes, at what pace, what are we doing with the balance sheet? So lots to talk about. Remember, you can text the word invested 21,000 on your cell phone to get my digital business card. Feel free to download it, send me off an email or text. Happy to engage and talk markets, planning, thoughts, concerns, ideas, anything that's on your mind. You know, you can also follow me on Twitter and TikTok at Kenny Polcari, and on Instagram at KennyP1961. So what are we having for dinner tonight? This is such an easy recipe, but it'll soon to become a family favorite, right? It's Italian-style breaded pork chops bathed in a white wine and chicken stock sauce. Now look, it's an easy dish to make, like I said. It's going to become one of your family favorites. I'm sure you will absolutely love this. For this, you're going to need the boneless pork cutlets, eggs, seasoned breadcrumbs, flour, butter, white wine, and chicken stock. Now look, you can delete the wine if you want and just use the chicken stock. I use a combination of both, but you can certainly delete the wine. No reason to have to use the wine if that goes against the grain. Anyway, get ready. Preheat your oven at 350 degrees so it's all nice and ready and warm when you're ready to put the pork cutlets in. Begin by rinsing and patting dry the pork cutlets. Set them aside. Now in a bowl, beat 5 or 6 eggs, depending on how many cutlets you have. Set that aside. In another large bowl, add the breadcrumbs. Season those with salt and pepper, onion powder, garlic powder, 2 handfuls of grated Parmesan cheese. You could even put 3. I love cheese, so I'd put 3. You want to mix it well. Now you want to set up this production line. First you got the cutlets, then you got the bowl of flour, then you got the eggs, and then you finally got the breadcrumbs. You want to dredge the cutlets in the flour, dip it in the eggs, and then in the breadcrumbs, right? So you want to make sure they're nice and coated with the breadcrumbs, and set it aside and repeat until you're finished. Now you're going to melt half a stick of butter and a splash of olive oil in a large nonstick frying pan. When it's nice and hot, you want it to be hot. Do not do it before it's hot. You want to sear the cutlets on both sides until the breadcrumbs kind of form a crust. Maybe 3 to 4 minutes per side. You want them to kind of goldeny brown and seared. Then you want to place them in a Pyrex baking dish. Next, you're going to add the white wine to the pan to deglaze it a little bit. Once the alcohol boils away, then you're going to add the chicken stock. Enough that so that when you pour it into the baking dish, the cutlets are bathing. You don't want them drowning in the liquid. You want them just bathing. Now you're going to cover the Pyrex dish very tightly with tin foil, and you're going to place it in the 350-degree oven for 30 minutes or so. Enough time to make a great salad, right? You want to serve this after 30 minutes. You're going to take it out of the oven, keep them covered until you're ready. You're going to serve it with a side of sauteed spinach and garlic and a large mixed green salad. You want to keep the salad simple, dress it in a red wine vinaigrette. Like I said, because it's all about the simplicity of this dish, yet it is such a great dish and everyone is soon to love it. Once you're ready, take the tin foil off, serve it either family style in the middle of the table, let everybody take what they want, or you can plate them individually and give everybody, the cutlet, the spinach. You could even place the spinach as a bed and put the cutlet on top. If you want to be fancy, put the salad on the side. Any way you want is the way it's going to be best. In any event, look at this day coming up behind me. The clouds are a little bit gray. It's not raining. They look a little bit kind of stormy, but not stormy like yesterday. So let's see what we're in for today. In any event, until tomorrow, take good care.